Welcome to Green Bonds Inside China's Playbook for Battling Climate Change. I am Laura Krieger, and I am the managing editor of ETF Trends and ETF Database. I will be your moderator for today. And today we have a really great conversation. We're going to cover a ton of ground. We're going to look at an overview of China's latest efforts to mitigate their industrial pollution, what green bonds are, and how they fit into China's net zero strategy and within a portfolio. And we're going to look under the hood of an ETF strategy that's designed to give investors access to this kind of growing marketplace. Before we get started, though, I've got some housekeeping stuff to go over. So first off, we offer closed captions for our video webcasts. If you want to turn these on or off, you just have to click that little CC button on the bottom right of the media player window. Secondly, throughout this presentation, you have plenty of opportunity to ask questions. To do that, all you have to do is just type your questions in that little Q&A box there at the top right corner of your screen. We're going to save all the questions until the end and then try to answer as many as possible. Third, we're going to occasionally be asking you polling questions during the presentation. We appreciate your participation here. We're going to share the results of those polling questions as we go. There's also a survey that you can complete at any point during the course of the webcast. You're going to find that in the teal folder there at the bottom of your screen. In fact, Global Beta will be randomly choosing 7 advisors who complete the survey to receive a Global Beta water bottle. So fourth, these slides, as well as a recording of today's presentation, will be made available on demand in the next 24 hours. You'll receive an email when that goes live and when it becomes available. You can also download a copy of the presentation slides via the green folder there at the bottom of your screen. You're going to find a number of additional resources in that green folder from Global Beta Advisors. That includes a link to the Global Beta ETF website, some research on exploring factors and valuations, a guide to trading low volume ETFs, and the fact sheets for GBLO, GBGR, and GBDV. These are other Global Beta ETFs, the fact sheets to those tickers. So I also want to call out something else in our green folder, and that is some details about our upcoming Exchange ETF conference. And Exchange is an advisor-centric ETF conference we're putting on in April in Miami Beach, Florida. You can find a link to the registration page in that green folder, or you can just scan that QR code you see there up on the screen right now. And you can use the code Global Beta, all one word, when you register to receive a complimentary pass to the event. Finally, if you are looking to receive CE credits for this webcast, just click on that yellow certificate located at the bottom of your screen. When you've completed everything you need to in order to get that CE credit, a little green check mark will appear and you will be good to go. All right, so next I want to introduce today's speaker, who is Justin Lowry, President and Chief Investment Officer at Global Beta Advisors. Justin joined the firm as an executive member pretty much from its foundation, and his responsibilities there include oversight of investment activity, market research, and product development at Global Beta Advisors. So I want to turn first to our topic of the day, which is green. And green bonds they're so cool. They're a particularly powerful way for impact-minded investors to put their money to good use, concrete use. These are bonds that fund green projects like new solar farms or energy-efficient municipal fleets. And except, as promising as that sounds, there's a few things you kind of have to understand about the space, a little bit of quirks to it. So with that said, I'm going to hand this over to Justin. And Justin, can you walk us through kind of what the green bond space looks like right now? Tell us a little bit about how it's grown over the past few years and what investors should expect out of it.
Yeah, Larry, thanks for having me. And we'll start on this slide here, and you'll see kind of the global emergence of green bonds over the past 5 years and how dramatically it's increased, not just globally, but we've taken the top 5 countries by issuances over the past 5 years. Of course, the United States has had the greatest expansion of green bond issuances over the past 5 years. to the tune of $180 billion over that time frame, contributing globally to about 1.2 trillion in global green bond issuances just over the past 5 years. Now, what we want to kind of talk about here is China's role as a green bond issuer. And a lot of people won't realize this, but they have become more and more serious about cleaning up their country, right? And that goes into their need and their desire to issue green bonds. And they've done that to the tune of $100 billion over the past 5 years, which ranks third globally. So look, I mean, we expect the green bond space to continue to increase with the demand for energy efficiency, cleaning up the environment, and really kind of climate change being top of mind and top of concern among global leaders here. So, and again, China has set forth recently specific goals to peak their carbon footprint and really to kind of hit neutrality over the next few decades here.
So, Justin, I'm sorry. Can I just ask you a quick question? Because I know we get this question pretty much whenever there is an ESG webcast that touches on China. We get this kind of question, which is, how can investors really, and especially ESG investors, people who are passionate about ESG, how can they really trust the data coming out of China? How can they trust that this data is good? We're even getting some questions now about this. Like, how can you feel secure that the data coming out of China is trustworthy?
Yeah, look, I mean, obviously, it's no secret that China has had, to put it lightly, issues around ethics. And when you talk about just ESG generally, and you're getting into green bonds, I mean, ethics become a really important part of things. And I see obviously a lot of criticism around just the design of ESG strategies and people conveying of ESG, because a lot of times you see companies or countries really overlooking the two other pillars, and a lot of it is just focused on the E. And so we don't want to overlook the fact that China's got humanitarian issues and like I said, ethical issues, and their general governance is not the model of what we want to see in the world. However, they are the biggest polluter in the world, and it's gotten to the point where the air quality in the country is becoming so prohibitive to live in. The pandemic obviously has done them no favors, but even before that, we saw a major dip in immigration in the country going into the past 7-10 years. And a lot of that has to do with the fact that it is a communist-run country, and it it's not very attractive on that premise. But really, the air quality issues are of great concern. I mean, people always say the APAC region was ahead of the curve on airborne illnesses, and because they were wearing masks. Well, they were doing that for that reason, but the other part of wearing those masks was because they had to filter out how poor the air quality was. And so now that things are kind of impacting the state economically, they really have no choice but to be more concerted, more serious about cleaning up their country, and they're going to have to take, or they're going to have to size up the standards of doing so with the rest of the world.
Okay.
So if we can go to the next. I'm sorry.
I was going to say, do you want me to go to the next slide? Here we go.
Yeah, so look, I mean, we break down the issuances by calendar year here. Again, you can see the extraordinary pace from 2020 to 2021 specifically. I mean, again, over the past 5 years, the space has been growing, but really from 2020 to 2021, it's really seen a big spike. I mean, globally, we're talking about over a 100% increase in issuances of green bonds. And, part of that has to do with monetary policy creating an easier way to issue bonds generally. But a lot of it has to do with the fact that there's been a realization of a lot of the climate change issues that are going around in the world. I think the pandemic has allowed people to take a step back and realize a lot of issues around the world. I spoke about the humanitarian issues that surround China, but there you also have the issues around climate change. And I think, globally and from an investor demand standpoint, people want to put their dollars to work to improve kind of the ecosystem of the world. And I think China's going to be a part of that. And, like I said, as hard as it is to believe and trust what the state does, they're going to have to, they specifically are going to have to put a lot of dollars and a lot of work to improve their infrastructure. And look, we see it here, 2020 to 2021. Again, like I said, globally, it was a dramatic increase, but China had the largest singular increase by country over from 2020 to 2021. So that was very interesting to me, and that kind of coincides with the state's mission that was set forth back in August, that they want to they want to peak their carbon footprint, and they want to hit neutrality over the next couple of decades. So if we can go to the next slide. There we go.
Sorry about that. I was having some mouse issues.
We love technology, don't we? So look, like I said, carbon emissions in the APAC region generally have been problematic, but specific to China. And I kind of alluded to it earlier, Xi Jinping, president of China, in August said they want to peak their carbon emission output by 2030 and hit neutrality by 2060. So those are pretty ambitious goals. Those timelines sound pretty far out, but when you think about the overhaul of infrastructure that's going to be needed to taking place in that country, it's actually a pretty aggressive timeline. And so what we're going to be seeing now is a lot of investments in hydrogen-based energy, wind, solar-based energy. But the other thing that isn't talked about is the storage of these energies and the efficiency and the eco-sound solutions around doing that. So I think people overlook that part of it, and a lot of dollars have to go into doing that and creating that efficiency, for the country at large. And then when you get down to the municipalities individually, it's going to be a large overhaul, and kind of the trickle down of that effect is going to take some time. And we mentioned it in your question, Lara, that China's typically synonymous with unethical practices, things that kind of contrast, the typical ESG standards. But again, when you're talking about a country that's the most populous country in the world, and they're also, and I'll touch on this in the coming slides, but they're also the largest consumer of coal in the world. So when you're talking about a population of about 1.5 billion people, and you're talking about the fact that their economy, their country really is dependent on coal and oil, the need to overhaul that system is going to require so much investment and so much time that we believe that they're going to have to create those standards and create those initiatives to move forward.
So Justin, we're getting a lot. We're hearing in the U.S. more and more about greenwashing and funds and strategies that claim to be ESG or claim to be green, or approaching a climate transition strategy, but they're just sort of greenwashed versions of it. So can you maybe speak a little bit to how Global Beta thinks about the risk of greenwashing within the Chinese bond issuance universe, and how you kind of make sure that you're not greenwashing, as you're pulling out issues to look at.
Yeah, look, I mean, there's no question. I mean, you have a lot of that. That's been a huge topic of concern over the past year and a half, 2 years, because people are trying to capitalize on this, on the concept of ESG. Like I said, a lot of people want to put dollars into, creating, higher standards around, not just companies, carbon footprint, but also, what they're doing in society, what they're doing from a corporate governance standpoint. So, I think, the way that we look at it, especially, in terms of like our product design, is we want to look specifically at, issuers that are practicing what they preach. And, I think when you look at companies that practice those standards across every pillar of ESG, you're more likely to end up with someone who is issuing debt that is true to what they're trying to accomplish here. We don't want to be investing in green bonds that are simply helping create efficiencies for the company. Of course, we want to see that. I think that all can kind of happen together. But when you're talking about the purity of getting to where we want to go, we want to finance a change in the world. And if you can finance a change in a country like China and really overhaul that system, which is what we want to do with our strategy, that goes a long way. I mean, we're all interconnected, globally, when we're talking about, addressing these issues.
Justin, can I ask you another question we have coming in? And maybe this is something just big, backing up a second. Question here about what defines a green bond. Can you maybe speak specifically to some of the green bond, like just some specific examples of green bonds you might see being issued for, in China or pretty much anywhere?
Yeah, no, so, green bonds, and, I'll touch on this as well throughout the presentation, but, green bonds are basically, finances for, putting dollars to creating solar panels, for example, or creating windmills to enhance, the ability to create energy off of, wind energy. And, and like I said here, talking about creating storage solutions. So obviously the materials for all these things cost money. And so, corporations and countries, municipalities, they have to create financing programs to handle all of that. And the easiest way to do that is really to raise money in the debt market. And that's where the green bond part of the equation comes in, where they specifically tag that issuance to that project, to that green project, to that solar panel, to that hydrogen-based solution. And so, it gets into what we're going to be talking about, which is what are the standards for a country recognizing an issuance as a green bond? Because again, we touched on it with the greenwashing concern. It can't just be, something where you're taking away the amount of coal that goes into something, or you're creating an efficiency around your energy output. It has to actually be a financing project that is going to improve kind of the ecology of what's going on in the place that they're doing business in, and that they're not causing irreparable damage to things around it in that project.
Right. Okay, I'll let you get back to it.
No, that was a great question, though. By the way, I hope I answered it clear enough for them. And so we go into China's carbon footprint, and I kind of touched on it a little bit. China's whole infrastructure relies on coal and oil. So you see it here, 80% of its energy consumption is rooted in coal and oil. So naturally, you can see here, there's going to be a major overhaul that's required. Again, Xi Jinping talking about peaking carbon emission by 2030 and neutrality by 2060. When you look at this pie graph and you're looking at that 80-20 model here, that's obviously going to have to inverse, and the only way that it can inverse is through substantial investment into creating that environment to be more reliant on alternative energy solutions like wind, like solar, like hydrogen, and again, everything that surrounds that. And like I said, as you can see here, those energy solutions make up such a small part of that. And that's right now, or that's as of 2020. So, you saw that, the investments over the past 5 years, they've been going towards that. But you can see how the pie has not really kind of moved as much as you'd like it to see yet. So that's why we believe there's going to be a major ramp up in the issuances of this debt over the next decade, 2 decades, to really get that overhauled. And I can't mention enough, when you're talking about a population of 1.5 billion, with an 80% reliance on these energy solutions, that's going to require a lot of capital to do. So if we can migrate to the next slide. So again, I want to put in context really here what that means globally. So we talk about China's reliance on coal and oil for their energy consumption, but what does that mean globally? So you look at this pie chart, and this is the most astounding thing in my opinion. So when you put every country outside of China together, they do not equate to China's consumption of coal. So China consumes 55% of the world's coal consumption. That is astounding. So again, it goes to my point earlier about the need for that overhaul. So not only is China as a country going to need to overhaul its infrastructure, it's such a powerhouse globally in terms of what it consumes. And that's why I talk about, people are skeptical about investing in China and investing in green bonds, and, how can I trust them? I mean, if we're talking about trying to get to a point where we really seriously tackle these climate issues, really tackle these ESG issues, you have to go after the leader in the space right now. And the leader in the space right now is China. If you can even cut that consumption by a quarter, I mean, the ripple effects globally are unbelievable. It really makes a substantial difference. So if you can really tackle China's issue around coal consumption, that goes a long way in terms of the climate issues globally. And like I said earlier, I'm putting 2 and 2 together for you here, where I say, okay, reliance on coal, plus the global or China's population naturally equals a substantial need for financing for overhauling that infrastructure. And Credit Suisse did the calculation for us. They expect that China will need to spend $20 trillion over the next 40 years to get to carbon neutrality. And to put that in perspective, earlier we were talking about the global issuances. So globally, over the past 5 years, we saw $1.2 trillion in green bond issuances. We're talking about China, just China, needing 20 trillion, 20 times that amount over the next 4 decades to achieve what they want to achieve.
That is a substantial amount of growth that's going to have to happen very quickly. So we'll get more into that in a second, but let's take a quick break to do our first polling question in the broadcast. And it's one that's going to dovetail really nicely into the next section that we're going to have. So the question is, are you planning on adding emerging market debt in 2022? And the possible answers are, I plan on increasing my fixed income exposure, but to the US only. I plan on increasing my fixed income exposure and am looking at emerging markets debt. Or I do not plan on increasing my fixed income exposure at all. So this is really interesting. We've had we've asked similar questions in webcasts in the past. I am curious to see how things have changed over just the last week alone, given everything that's been going on in the world. So we'll see what the audience says. I think that's been enough time. Let's put the results up. Here we go. Looks like about 2/3 of the audience, roughly, isn't planning on increasing any bond exposure, but another good quarter and chunk or so is looking at emerging markets debt as well as other options. So, Justin, does this line up with some of the conversations you've been having with advisors? Are you finding that there's a reticence to increase fixed income exposure just in generally? And if so, what do you say to those folks?
Yeah, the poll results don't really surprise me here. I think the EM debt kind of is pretty telling to me. I think that there's no question that across all asset classes, emerging markets are generally undervalued, especially when you talk about them, relative to the U.S. markets. And so I'm not surprised, and that's why we kind of talk about China and really the emerging market space as a very opportunistic market right now, because you look at, like I said, you look at both sides, equity, fixed income, even currency to some degree, but you look at those, and there's so much, there's just so much value to be had, and when you're talking about trying to manage kind of the extreme valuations that we're seeing here in the States, kind of diversifying out a little bit more into EM is what we would expect right now. And, the divergence of monetary policy too, like specifically with regards to the States and China, China is going to have to go into more of an easing mode. We'll see how aggressive they end up being with that. And then, on the flip side, the U.S., save for the Russia-Ukraine situation, but they're going to have to, tighten things up a little bit. Probably not as aggressively as initially thought. To be honest with you, I never bought into the 7 rate hikes this year, even without the Russia-Ukraine crisis. But, certainly I would say, 2 to 3 hikes are probably expected. And, that's enough clearly to create the volatility that we're seeing in the U.S. markets now. So in terms of opportunity, I do think EM debt, even EM equities, are kind of very interesting to look at.
That's a really good point. So now it's time to kind of drill in a little bit deeper into the actual characteristics of the Chinese green bond space and kind of how they function as fixed income instruments and so on. So Justin, can you tell us a little bit about what bond spreads look like in the market right now in the Chinese green bond market as compared to the rest of China bonds just as a whole?
So I love this chart here, and Fidelity put this chart together where they took AAA rated non-green and green bonds and looked at the spreads over the past few years here, and you can see that the spreads on the green bonds are not exactly what you would expect. They're still trading at more of a discount than bonds are generally. And so again, I talked about in the previous slide on the polling question how there's an opportunity right now in the emerging markets area and China specifically. And I think this chart represents that opportunity. Again, the opportunity of that, and you see it. I kind of noted it here. The greenium or the price premium on these bonds, is not there yet. And so I think that represents an opportunity, because I do see this chart maybe not inversing necessarily, but certainly migrating more towards green bonds going in that direction versus bonds generally. Part of that will do with my belief that green bond issuances are going to rise relative to general issuances. But overall, I think the investor demand will start percolating a little bit as well. And so, we'll see what kind of incentive programs that the state will try to employ to really attract investor demand here. Again, I'll say it again. There's so much dollars that are going to need to be put into this infrastructure here that they're going to have to create, or they're going to have to get creative in terms of spurring investor demand on these green bonds.
You mentioned that you think that the issuance of green bonds is going to skyrocket. Is there going to be a point where they stop being called green bonds and they just be called regular bonds, right? Like we stop calling them out as green bonds, they just become bonds,
Yeah, look, that's actually a great question, because you think about it, and I think it goes back to the whole notion around capitalizing on the idea of ESG. And, if you can categorize something as green or categorize something as ESG, that turns more heads. But I do believe over time, people are just going to become more, I don't want to call numb, but for lack of a better term, become numb to that designation, because it's not like when you're issuing a bond, you're tagging the specific financing project to it. It's not like if I'm raising money to build a coal mine, I'm not saying, hey, it's the coal mine bonds here or the black bonds here. So I think the nomenclature will just naturally fall off over time, because again, it just becomes part of the overall financial infrastructure on a global basis. And I think that'll ring true with China as well.
Thanks for answering that. Okay. Want me to move on to the next slide?
Oh, yeah, please, if you don't mind. So we kind of touched on it a little bit here, I'm sorry, if you could go to the previous slide. Yeah. So we kind of touched on a little bit here in terms of spurring investor demand. So, what can China do to incentivize investors to buy green bonds, to invest in China? And, I took a couple of policy suggestions from, climate bonds initiative. And, obviously they could give you tax credits. So these issuers could issue zero coupon bonds, and investors can receive tax credits for having invested in these bonds. The other thing that could happen is direct subsidies. The state could come in and simply finance the interest payments for the issuers. So that does two things. One, it creates ease for these issuers to issue bonds if they don't have to pay interest payments. And two, it's a great way to get investors more into these green bonds. And the last one is tax exemptions around some of these bonds. So obviously the best example is muni bonds are exempt from federal tax. So perhaps we see green bonds, and just talking about China specifically, perhaps we see green bonds exempt from the state taxes over there. So any one of these three, and they're all kind of intertwined to some degree, any one of these three incentive programs would certainly spur not just the supply of issuances, which we want to see. We want to see these come out because we want to see these projects go forward. But it should get investors to be more inclined to do it. And I kind of touched on this earlier. I think that generally speaking, that investors want to invest in green. They want to culturally change what's going on in the world right now. So, you couple the ideology of that with the financial incentives that could occur here, and I think those parts will equally result in something where you could see investor demand just tick up over time.
You just said that investor demand is going to kick up, but there's some signs that the Chinese economy might be sort of, actually slowing down, right, between the real estate market kind of going kerplooey and the spread, the continued spread of variants of COVID between Omicron and whatever is going to come net down the pike next. What do you think? What does global beta think that, or rather, how is this going to impact the plans, the China's net neutrality plans, and the issuances of green bonds? Is this going to kind of have a negative dampening effect on issuances? Is it going to just speed up investor demand? Like, what? Give us a little bit of context and flavor there.
Yeah, no, I think, because I was actually speaking with someone who lives in Hong Kong right now, and they basically said, look, I mean, we're about to encounter the Omicron wave that you guys just encountered, and they're going to start going door to door, testing people again, and like testing people multiple times over, and creating more lockdowns, and we're already seeing the Chinese economy taking a dip for those reasons anyways, and I think more of that may be coming as well. So, and I kind of touched on it a little earlier with monetary policy and seeing what China will do. I think they have no choice but to be more aggressive in maybe some stimulus programs and obviously cutting rates. And so to the extent that they offer what I think will happen, which is fairly accommodative policies, that will spur the debt market. And, we saw that playbook, here in the States, when things went awry from the depths of the pandemic. So I expect China to again, they're a self-serving country. They're going to try to rescue their economy the best way that they see fit. And they're going to put together accommodative policies to get there. And, the other thing weighing on the state is the fact that they're the ones who talked about wanting to achieve these goals. So I think they're more incentivized than ever to both spur an economic activity and also and also kind of make sure that they get to those goals or get close to those goals over the next few decades. And so here's kind of the breakdown of standards. So, we see the kind of the European model, really aligned with the Paris Climate Agreement, right? And so that's really the gold standard of ESG practices, ESG standards. And so we contrast that with, what the NDRC came out with. And the initial guidelines around green bonds, and this may kind of further answer the question of the person that asked about green bonds originally, what the standards are for a green bond. And initially, it was simply for, pollution prevention, and that was it. Because pollution still is and has been a major issue in China. So when they set forth their guidelines, that was what was top of mind. And they didn't really conform or have a desire to conform more to the standards and parameters that were set forth in the European model here. But since that time, over the past 6 to 9 months, they've been more specific around those guidelines. First, they've been creating uniformity around all the government agencies, the NDRC, the CSRC, the PBC, making sure that all of those entities are aligned. And they're super focused on carbon emissions, parameters around carbon emissions, and then adopting the principle of do no significant harm. And I kind of talked about this earlier, where if you're just financing a project that's creating energy efficiency or greenwashing, that is a situation where you're not recognizing any environmental harm that you could be doing in the event of that project. So they put standards around the projects you're moving forward with, but also the impacts of those projects on the environment. So they're they're doing a better job of recognizing that and applying those standards in practice. And and then we see, the users here, obviously, it's a communist country, so it's going to be dictated by policymakers instead of the financial markets, which is fine, as long as those policymakers are consistent with what's going on in the rest of the world. And from what we can see so far, that is going to be the case. And China originally did not create a classification system, so they weren't creating standards through each industry like the European model has and does. They've since adopted that model, and again, more consistent with the European model. And then lastly, in terms of screening criteria, we're talking about the fact that they didn't exclude fossil fuels in terms of green bond projects. Now they're putting that forward. They're cracking down more on issuers who are trying to put issuances that are not true to the green bond standards, and putting parameters around kind of what the carbon emission levels are allowed to be in terms of those projects.
All right, thanks for that context. Let's take a real quick break for our second polling question of the broadcast. I put that up on the screen there for you. And the question is this: are you planning on adding ESG or green strategies to your portfolio in 2022? And there are a couple of different options there. You can say, I currently hold a position, plan on adding to it this year. I currently hold a position, but do not plan on adding to it this year. I do not hold a position, but I'm interested in adding one. I don't hold a position and don't plan on adding one, or I need to just learn more about this space. So I'll give you a second or two to kind of look over those questions or those options for you. Make your selection as to one that makes the most sense for you. And I think that's probably been enough time. And let's see what the audience has to say, shall we? There we go. Okay, it looks like there's a number of ESG skeptics in the audience right now, which is interesting. And I would be curious to hear, Justin, what you think. I mean, is this kind of lining up with your experience with advisors? Do you meet a lot of ESG skeptics when you're talking about this opportunity to folks? And if so, what do you say to them?
Oh, absolutely. I mean, it's no surprise. And look, I mean, that's why I was excited to do this webinar, because I do think that the space requires more education. I think that there's a lot of misnomers about ESG. And look, I mean, there are certain aspects that, in terms of strategies and indexing and things like that, that have done the space no favors. And, so I think that there are certain narratives that people have adopted and, hold true. And look, I mean, that can be said about a lot of different things, but if in terms of talking about this specifically, I do understand that I think people just generally need to learn more about what it is. I mean, in fact, we had someone ask just generally what a green bond is. And, the high level answer, I kind of gave, but there's just a lot of nuances that go into it. And, thinking about what it does, why people do this, why there's a focus around financing projects and what goes into that and what kind of money goes into that. And, I also think that there's a narrative out there that, like Apple and Facebook, they get higher ESG considerations because they lack that carbon footprint because they're a technology company, and a lot of technology companies get that general benefit. And what gets overlooked in that process is their corporate governance standards. More Facebook than Apple in that regard, but I think when people see that and they see, well, this is kind of like ridiculous that you've got Facebook as one of the top holdings of an ESG strategy. Why would I hold that? I'll just buy QQQ and be done with it. So I think that it just goes to a better understanding of the portfolio construction process and really looking under the hood and understanding it a little bit more.
Thanks for that. So I know that you've got a strategy in the hopper for this. It's planned for a launch in the next few weeks. What can you tell us about this particular strategy, the GRBD ETF, and how might it differ from maybe some of the other green bond strategies that are out there and available? Like, tell us, just walk us through what this strategy is all about.
Yeah, no, I'm excited to talk about this one. Obviously, we had filed for the fund back in December. We've got it available institutionally right now, but we wanted it to make it commercially available for not just financial institutions, but also retail investors as well. And kind of researching the area specific to green bonds. I mean, there's not a whole lot of funds out there. The ones that are generally global or international and not really region specific. And so, again, we looked at developing this China Green Bond Fund because we saw an opportunity to, again, when we talk about trying to heal, the Chinese infrastructure over here as part of the overall global initiative. In our opinion, we create this as part of a general series of green bond funds. So I think you have to start with a region-specific fund, and we wanted to make it an active fund because we didn't want to get stuck with the pitfalls of some of the indexing flaws that can occur in strategies such as this. So we want to be able to be nimble and make sure that our research team is on top of the things, on top of the issues that matter most when you're talking about green bonds and you're talking about ESG. And so one of the things that we're leveraging right now, just taking a step back for a minute, we talked about how can you trust China? All right, how can you trust Chinese corporations? So two things here. One, we're not going to own state-owned enterprises. As much as I trust China's desire to get there, probably don't necessarily trust the means as much in terms of the state. So we want to preclude state-owned enterprises. The second part is we want to look at how these corporations, how these issuers are practicing on each pillar of ESG. And so that's why we've licensed FactSet's ESG platform, because what that platform does is it does a qualitative scrape across all major news coverage agencies. And I had actually, pushed back on them when they presented that to me, and I said, look, I mean, how can we trust, the Chinese local news to give us nothing but rosy-colored, ratings on their corporations? And they said, look, those things are taken into account, and the coverage that we're looking at has to be, credible news agencies, credible articles, the Wall Street Journal, for example, things like that. So they're looking at keywords and pairing it together and creating composite scores for each pillar of ESG, and really getting an understanding for what kind of industry level practices each of these corporations have. So it's a pretty thorough way about going about it. I've used my experience has been with MSCI before. I've gone down their rating system. I've gone down the ratings, or I've used the rating system of Sustainalytics, but this one's really unique, and I think that the way that it interprets how corporations are practicing, ESG standards is a pretty thorough and good one. So again, we're looking at issuers that are practicing each pillar at average or above average levels relative to their industry peer groups. So that's a prerequisite. If they don't have coverage, they're not going to be in consideration. And so from there, we kind of get more into the fixed income of it and the fixed income characteristics of it. And so we start looking at things like coupon rate, duration, yield, things like that. And what we want to do is we put those metrics in to basically optimize the best of low duration, higher yield portfolio. We're looking at credit quality too. Most of the portfolio will be, high credit quality bonds. There will be some that will be lower level credit quality, but to kind of smooth out the effect of, bonds that may not have the highest credit quality, we're looking at the net debt to income ratios of the balance sheets of the corporations that are that are issuing these bonds. So it's just another level of quality that we're putting into the portfolio, because we don't want to be stuck with low quality bonds, especially in the wake of the real estate crisis that's going on in China. I think it's slowly starting to abate, but there's still some issues. I think there's still going to be some defaults that occur over there in that space. But generally speaking, we're trying to flesh out some of the quality attributes of the bonds that we're considering. And again, our focus is to provide an end result of low duration and higher yield for our portfolio.
Great. Okay, so it is almost time for us to start moving into the question and answer section of our webcast. But real quick, I'm going to throw up our last polling question of the broadcast. It's right up there on the screen. And it's just a question: would you consider allocating to Global Beta's China Green Bond ETF, GRBD is the ticker, in the next 6 months? Your answers are yes, I like the concept and the structure. It sounds interesting, but I need to do more research. Not right now, but I'll follow the strategy, or I have no interest at that time. So I'll give you a chance to just take a look at those. Make your selection over the next few seconds, and then we can move in on the questions. And we've already got a couple of really good ones in the queue right now. And I'm going to start here with one about this is kind of an interesting one. It kind of comes up whenever we have a question or we have a webcast about China. It's what happens to your fund, your strategy, in the event that the U.S. is, decides to prohibit U.S. citizens from investing in particular Chinese securities or the Chinese security market as a whole.
Yeah, no, that's a good question, and it's interesting. I mean, I think that we saw the peak of the U.S. and China conflict, kind of towards the end of the Trump administration, and then into the Biden administration. It remains a risk and a possibility that they may do that. I just don't really see it. I think we saw the level of restrictions that they're willing to go forth with, that on both sides, really. Unfortunately, I think that the Russia-Ukraine conflict has created the spotlight to be shifted away from China. China is no longer public enemy number one, at least right now. Obviously, Russia is. And it looks like China is going to try to thread the needle between advocating for Russia and trying to be a part of the solution for Ukraine. So if they come out of this crisis looking at least neutral, I think that takes the heat off them a little bit. But you always have to keep an eye on that. The other thing that we're trying to, the other thing that we try to build this portfolio around is really just companies that do business in China as well. And so if you're doing a large volume of business in China, and you're issuing green bonds, those are in consideration as well. So it could be a circumstance where we'd have to pivot in terms of getting out of domiciled Chinese corporations and into neighboring corporations that do business in China. That's kind of a way around it, and staying true to the strategy, true to what we're trying to do here. But I just don't see that risk playing out, just because of how intertwined China is with respect to the U.S. on an economic basis.
That's a good point. So we have a question here about why would you create a China-specific green bond strategy and not a general emerging markets bond strategy? Because of course China, may be the biggest, but it's not the only big polluter in the emerging market space. So why start with a China-specific strategy?
Yeah, so I think. And I kind of talked about it when I was bringing up some green bond strategies that are already available, and I think that it just makes sense, in our opinion at least, to focus regionally first, because for us, China's carbon footprint is just so alarming that if you can create a situation, create a strategy designed to help finance, the improvement of that region, I think that starts the domino effect a little bit more efficiently. It's not to say that we won't look at and launch an EM green bond strategy, but I think that the need here, the most addressable need right now, is to satisfy what's going on in China right now, and if we can do that, I mean, then we're going to be able to start branching out. I just think doing regional green bond strategies are the most effective way to kind of hit the objective that we're trying to hit.
Makes sense. All right, we have time for one really, really, really short question, I think. And here's one. Is nuclear energy at least a partial solution for China's energy picture?
Yeah, look, I don't think that there's a silver bullet, and that's why Credit Suisse, says 20 trillion, and I tend to agree with them in terms of the level of financing that it's going to take. I don't think that there's one singular alternative energy solution to get there, and also the materials around developing nuclear energy are difficult and costly. So that's why I think when you're talking about doing it the most efficiently, you have to talk about wind and solar. I think those are the most economically efficient ways to get there. But I think you have to consider everything, and I think especially with the aggressive timeline and the level of overhaul that they're going to need to employ, I think everything's on the table.
Great. All right, well, that's about all the time that we have available for our questions today. If we didn't get to your question, and I know we had a few that we didn't get to, don't worry, somebody from Global Beta Advisors will get back to you after the webcast is over. Now, I did want to just take one really quick second to remind everyone again that we are excited to offer a complimentary registration to Exchange ETFs conference. On behalf of Global Beta Advisors, y'all are going to be there in full force. It's from April 11th through the 14th in Miami Beach, Florida. The link to the registration page, it is in that green resources folder, or you can just, scan that QR code that you see up there on the screen right now. It's going to take you right to checkout, and you can enter the code Global Beta. Again, that's all one word, Global Beta, to claim that complimentary pass. Justin, I'm really looking forward to seeing you there next month and getting a chance to chat about green bonds and pick your brain about it in person.
Same here.
Thank you so much, everybody, for attending today's webcast. A very special thank you to Justin Lowry from Global Beta Advisors for joining me today. As a reminder, the on-demand version of this presentation is going to go up and made available to you shortly. You're going to get an email by tomorrow notifying you when it goes live. So thank you again, and I look forward to seeing you again next time.